Imagine solving problems that even the fastest supercomputers can't handle. Things like simulating complex molecules for drug discovery, optimizing global supply chains, or breaking codes that protect today's digital world. That's the promise of quantum computing. And one company at the front of this race is IonQ. Let's break down what IonQ is, how their technology works, and what their financials reveal about where they stand today. IonQ was founded in 2015 by two physicists, Christopher Monroe and Youngsung Kim, after decades of research in quantum science. The company is headquartered in College Park, Maryland, and its mission is bold: to build the world's most powerful quantum computers and use them to solve some of humanity's most complex problems. Unlike competitors who use superconducting circuits, IonQ takes a different approach: trapped ions. Individual ions are suspended in a vacuum and manipulated with lasers to form qubits, the building blocks of quantum computing. This approach has some big advantages. The ions are naturally identical, which makes them stable. They hold quantum states longer, and they allow for more flexible connectivity between qubits. But it's not without challenges. Scaling the number of qubits while keeping operations fast and reliable is a massive engineering hurdle. IonQ's machines are already accessible through major cloud providers like Amazon Web Services, Microsoft Azure, and Google Cloud. That means researchers and businesses can start experimenting with quantum computing today without owning any hardware. IonQ isn't just building in-house. They're also expanding through acquisitions. Recently, they agreed to acquire Oxford Ionics, a UK startup, in a deal valued at around $1.1 billion. They've also taken a controlling stake in ID Quantique, a leader in quantum communication technology. Moves like these bring in new intellectual property, strengthen their technology base, and broaden their presence in areas like quantum networking and sensing. Now, let's talk numbers. In the second quarter of 2025, IonQ reported revenue of $20.7 million, about 15% above the top end of their own forecast. As of June 30th, 2025, they held $656.8 million in cash, cash equivalents, and investments. And shortly after, following a major $1 billion equity financing, their cash position swelled to about $1.6 billion. But like many deep tech companies, IonQ is still losing money. They reported a net loss of $177.5 million for the quarter, with an adjusted EBITDA loss of $36.5 million. The takeaway? They have plenty of cash to keep building, but profitability is still far off. IonQ sees the potential market for quantum computing reaching $65 billion by 2030. Applications range from finance and logistics to pharmaceuticals and cybersecurity. But there are risks. Scaling the technology is incredibly difficult. Competitors like IBM and Google are moving fast, and most of IonQ's revenue today comes from early-stage services like cloud access. For now, the path to large-scale, profitable applications is still uncertain. For investors and industry watchers, there are a few key things to follow. How quickly IonQ can move toward fault-tolerant quantum computing. In other words, machines that can run long, useful programs without errors. How effectively they integrate their acquisitions and partnerships. Whether their revenue can scale beyond tens of millions per quarter. And ultimately, whether they can turn their deep cash reserves into a sustainable business model. IonQ is one of the few pure-play quantum computing companies in the public markets. They've built a strong cash position, their technology is promising, and their ambition is clear. But this is still a high-risk long-term story. For those who believe quantum computing will transform industries, IonQ is a company worth keeping an eye on.